How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I have a great interview for everyone. We're going to be talking with Jim McCarthy from McCarthyHatch, which is a great consulting firm working with a number of banks across the country. So I'm very excited about having Jim here with us today. And with that, I'm bringing Jim in. So, Jim, how are you doing today, sir?
Hey, I'm doing great, Joe. Thank you very much. Glad to be on the program.
Great. Yes. Thank you. Thank you so much for spending a few minutes with us here today. So I guess I'll kick us off. I'll get us started. Could you give us a little bit of background on McCarthyHatch? What is the company and what do you do?
Sure. So McCarthyHatch focuses on that intersection between the regulator and the examination, right? So how does that examination work functionally? And how can you structure your company in such a way that that exam becomes effortless and less of a risk, right? So we work really hard on compliance management systems throughout the country, be it a bank or a non-bank. And then we have a claim to fame where we have a technical product that uses consumer sentiment to predict risk. And so my background of late as a founding member of the CFPB, and I'm sure we'll get into that, was to build that complaint space in the United States for how consumer financial complaints move around the marketplace. And so in the CFPB, we used that data very strategically. And I've recreated that system outside the CFPB, and banks purchase that system in order to read their sentiment and find that risk in near real time. It's super exciting. So we focus on the CMS system and then heavily within the complaints enterprise within that CMS system.
That is fascinating, Jim. That's yeah, and we'll pick all that apart here momentarily as we go through. But let me kind of I'm gonna take a second to back up a little bit here. So let me ask you this: how long has McCarthyHatch been around? Like, when did you start the business?
We officially started many years ago, but we formally organized 2 years ago. So we've been in business for 2 years formally.
Okay, very interesting. And then I know you just mentioned the fact that you were involved with the founding of the CFPB. What was your background? How did that all come about? Like, were you in the banking world in some capacity originally? Can you give us just a little bit of how you kind of traveled through this whole adventure?
Sure, that's a great question, right? How did the people that built the CFPB end up landing there, right? And I will tell you, there's no magic sauce. It had a lot to do with who you know and what you've done in your career. I have spent my entire career in banking, right? Small community banks to regional banks to national banks. I have been focused in consumer finance, regulatory law, and compliance. And so when new products are introduced, like, say, internet banking, what does that mean to the industry? And what are the regulations that impact that new product back in the day, right? And so that experience that I had in bringing new products and services on, regulatory change management, and just the general nature of the banking industry made me a candidate to go out to the Washington, D.C. to begin the CFPB. I was at the FDIC and I worked in DRR, which is the department that closes banks when banks are in trouble. And during those years, the 2008 mortgage crisis, there were a lot of banks that failed. And so I was at the CFPB closing down and marketing and selling failed banks when I got the phone call to say, hey, do you want to come out to Washington, D.C. and work on a really cool project? And it didn't take me long to say yes.
That is really interesting. Jim, we might have to do a whole nother podcast just on your experience of that whole time period and having to close down. Because I want to say, I think over that, 3 or 4 year time period, there was probably about around 800 banks that failed, give or take, in that, between like 07 and 2010, 2011, something in that neighborhood. But that had to have been just a fascinating experience to go through all that.
Yeah, sad. It was sad for communities. It was a very difficult thing to go through, but it was needed. I will say the number one government agency that has proven itself over and over quietly in the corner is the FDIC and the insurance pool that insures our banking system. It's effortless. People didn't even notice that we closed that many banks. If you were a bank customer, and even if you were a bank customer, you weren't harmed because it opened right back up again. So very impressed with the FDIC, impressed with the model that built the insurance system, and it has proven over and over again to work very successfully.
Perfect. Fantastic. And then, so if we could lead in now, can you tell us a little? I know you gave us an overview of like what McCarthyHatch does, but and I'm going to take something here from your website here a little bit. So it said basically McCarthyHatch specializes in real-time risk prediction and deploying compliance resources. Could you maybe just try to give us one or two cases or examples of maybe some banks that you guys have worked with that could give could give the audience maybe a little bit deeper example of what it is you guys do and how you do it in terms of working with compliance and things like that?
Absolutely, Joe. I mean, we work with the top 5 banks in the country. And our model uses consumer or customer sentiment to determine whether the bank is exposed to risk. Now, why did I know to do that, right? Well, at the CFPB, there was only a certain bucket of money available when we built that, right? And unlike the FDIC and the OCC, the CFPB had to monitor the entire consumer financial marketplace, not just banks, but non-banks, mortgage servicers, debt collectors, go down the line, right? Mm-hmm. So the question is how do you operationalize an examination, supervision, and enforcement force across that industry most efficiently? And so what we did at the CFPB is we used consumer sentiment to find out where the problems were in the United States from a consumer financial perspective. Now, clearly, Joe, you know this, you remember this, you were part of this in fixing and talking about this. The mortgage complaints were astronomically high. The sentiment regarding mortgage products was astronomically high. And clearly, we already knew that wasn't a big mystery, right? So it really didn't give us much intelligence other than it identified the companies in which were providing the majority of that harm. So it would tell the CFPB which company to go into and what areas to look at. There were other areas that popped early as well, like, for instance, ITT Technical Institute. Well, that was a large institution that popped in the complaint data that raised enforcement actions, and that institution's no longer in existence today. So what we do for the top 5 banks in the country is we read their sentiment. We read all of their sentiment, and we run that through an artificial intelligence system that's the most complicated compliance model built to date. And we identify potential regulatory violations and risk based on that sentiment. Let's face it, Joe, consumers complain and oftentimes they want a puppy, and they're just not going to get a puppy, right? So how do you weed through that noise and see if there's something really serious in there, right? A potential violation, a broken system, or a control that's not functioning properly. And so we give the bank a heat map that shows them exactly where their regulatory risk is based on what that customer is saying.
Interesting. Very interesting.
Yeah. And then that augments their compliance and risk efforts, right? So, we resolved all those complaints and we found that there wasn't a problem for whatever, that we resolved it. And that's fine. But what happens when you look at them all together? Are there any trends or consistencies about that population that would give you an indication or a warning? So like the CFPB would use it to find out who's causing harm in the marketplace, the banks can use it to find out what areas inside their bank are under the most pressure from a risk perspective, and then just double check it. Make sure you've got compliance over it. Make sure it's not a valid issue. So that's kind of in a nutshell. And I'm passionate about it, Joe. So
Oh yeah, no, I think this is really interesting stuff. So let me ask you this. So when you're working with one of the biggest banks and you've got, I'm sure they're giving you kind of a treasure trove of data that you guys are analyzing and running through this system. Did anything surprise you? Like, was there any elements of risk that you maybe something you didn't think you would see when, as you guys were, doing all this analysis?
Yeah. And you know what? That's a great question because there's something coming up right now. And I'll explain this in a moment. But one of the things that came up, Joe, was that we have an unacceptable amount of risk in the older American and the service member populations.
Huh.
So in those two populations, they have higher volumes than the regular population. We're seeing more volume in these two populations. Now, one of the things that I do very a lot is I keep track of everything that's happening in Washington, D.C. and at the CFPB and the other regulators. And so the CFPB has worked very hard in the Trump administration to eliminate some enforcement actions and lawsuits that were started during the Chopra directorship at the CFPB. And periodically, the CFPB has to send out a memo that says, we're retracting this lawsuit, whatever, blah, blah, blah. And what's really interesting, Joe, is at the bottom of those letters, totally unrelated to the message in the letter, there's a paragraph that says, but we're going to pay attention to service members.
Okay.
And so I thought, you know what? It's probably a good time for the banks to look at their service member portfolio and make sure that they're adhering with the regulations that are there to protect those service members and the other regulations that are there to protect everyone. And so, yeah, that's the interesting anomaly today, is that older Americans and service members are really struggling with consumer financial products and services.
That is really fascinating. And now you're jogging my memory, and maybe you might know about this if in case I'm misquoting here in some way, but I think, did Navy Federal Credit Union just get in trouble for something along these lines of not doing something for service members that they were supposed to be doing? Or I just feel like I read an article in the last a couple of months that they got in trouble for something along these lines, and I can't remember exactly what it was, but it just and again, and I don't know if you guys work with credit unions or not, or I don't know if you guys just stick strictly to banks. But no, it's a very interesting thing that you're bringing up here, Jim. It really is.
Yeah, and with Navy, I'll tell you, we just wrote a white paper on this subject of service members, okay? And we did a panel discussion, a live panel discussion with Eric Goldberg, the top national attorney in consumer finance from Ackerman LLP, and Colonel Paul Cantwell, who was the director of service member affairs at the CFPB and a life veteran of the military, and Leslie Hansen, who is the owner of the SDRA and the MLA policies at U.S. Bank. And we had this discussion. And so it's an interesting subject. When we wrote the white paper, Joe, clearly we have access to which companies have the highest volumes.
Okay.
When we publish, we have the tendency not to want to shame those companies. Okay. So we'll say the volumes are this, these are the issues being found, and we won't name institutions. Why? Because I'm knocking on their door trying to get them to buy our system, right? So I don't want to make them mad. But I will say this in regards to Navy Federal Credit Union. It's important to understand their volume is off the charts, higher than anyone else's in the service member area. But remember, their entire business model is military.
Mm-hmm.
So aren't they naturally going to have a higher population? So it's more important to look at the context of what's happening. I will say that Navy Federal Credit Union has some operational challenges today. I would encourage Navy Federal Credit Union to sit down and listen to their staff, because their staff tells me on a regular basis what's wrong and why it's not working. Mm-hmm. And it doesn't seem to resonate with the board. There are serious problems there, but inherently that industry is very difficult to service. when you have an individual who might be deployed for 6 months and can't get a Reg E notice or meet the Reg E requirements for a disputed transaction because they're on a ship in the middle of the Gulf,
That's
right? It's a delicate population to deal with. And so maybe Navy Federal Credit Union is doing really good. I don't know, but the numbers show it differently. And what I hear on the ground is that they've got some challenges.
No, it's very interesting. And then, and I just had this thought pop into my mind too, Jim. With all the issues going on with, like you're seeing with TD Bank right now, with a lot of the BSA, AML issues, and it's not just, I don't mean to pick on TD because it's not just them. There are other banks around the country that have had issues. They're just the most well known at the minute because their issues have been the most publicized in, financial press and stuff like that. But do you guys spend time working with banks on things related to BSA and AML and compliance challenges in that area?
We do, in terms of identifying the risk.
Okay.
We measure how they're performing in those areas. Our specialty is not in that area in terms of going in and fixing it. But I'll give you an example with TD Bank, just a real quick example.
Sure.
When the CFPB was founded, if you were a bank over $10 billion, you were under the purview of the CFPB. You were now going to be regulated by the CFPB. It meant they could examine your books and issue you enforcement penalties. You had to be over 10 billion. When we went to board TD Bank told us to take a flying leap, right?
Wow.
And their basis of their argument was they're not an American bank.
Okay.
Or was this? Yeah, I think they're a Canadian bank.
They're Canadian headquartered, yes.
Right. And so they were caught completely by surprise that we had purview over any of their operations, their products, their services, anything they sell in the United States. So I can tell you that when we boarded TD Bank back in 2010, it seemed to me it was a surprise to TD Bank. Now, if you're an organization that isn't set up from a compliance perspective to meet a new regulator and it's a surprise to you, it doesn't surprise me that some problems happened.
Yeah, no, and that is an excellent point, Jim. It really is, because I don't, and I would say for people in our audience, like that's probably a deeper level that most people are not thinking about in terms of just dealing. Again, every bank has to deal with a regulation and a number of regulators. But to your point, sometimes new things do come up. And if you're not kind of keeping on top of things, yes, surprises in the banking world are not a good thing. I'll put it that way.
Sure. And the question to ask yourself if you own a bank or you sit on the board of a bank is, if I get examined, what are my protections that information that's going to the regulator has already been looked at and analyzed by us, right? You never want to send information to a regulator that you haven't already just completely analyzed.
Yep.
And that's absolutely the CMS system, right?
No, that's fantastic. So, all right, well, let me move on for just a second here. So I just want to, just in general, how do you feel? I know there's obviously there's so much going on at the CFPB, everything there, but what about everything else? I mean, how do you feel in general about the regulatory landscape? I mean, do you see things as kind of stable, or do you think things are just very fluid at the moment? Like, what's kind of your general thought on everything right now?
From a banker's perspective, Joe, if we were climbing a mountain, this is a valley where there's not much difficult climbing, right? Because the regulatory umbrella has come down, right? Now, smart banks, and when I get called in to consult with a bank about the condition of Washington, D.C. and the regulators, the FDIC, the OCC, and the defunding and so on and so forth, when I get brought in to have that conversation, my answer is, hey, don't forget there's a 7-year look back. So this administration will end and someone else will come. And that someone else that comes can go back and look at what you did during this administration. So be careful, right? And that's the common sense. Stay the course in compliance and risk. You can cut costs, but stay the course. And so that's really my advice to the large organizations. But and I think that's where you were going with that.
Well, yeah, I just want to, again, as a kind of a risk and compliance professional in many ways. I just like to, like I said, I always like to get people's thoughts. Just how are you feeling on things right now? I mean, there's a myriad of things going on right now, whether it's
Oh yeah.
discussions around M&A, or discussions around crypto and stable coins, or whether it's discussions around BAAS and broker deposits. Like, I mean, there's so many things kind of going
Yeah.
on right now, and that's why I basically said, like, do you feel, and I thought your comments were spot on, Jim, in terms of, like, this is a valley right now where it's not as difficult perhaps to navigate, but I think there's still a lot of things on the horizon. Like, there's a lot of things out there that banks need
Yeah.
to be looking at the moment, because I think there's a lot that can creep up on us in the next year if you're not paying attention.
Yeah.
That's kind of my thought.
Yeah. And I think if I were a listener listening to this, right, and I'm maybe not deep into the banking and risk world, and I'm just interested in listening to this, I would think this discussion is important. Historically, regulators have implied powers.
Mm-hmm.
Okay. So they'll come in and they'll examine, and they will comment negatively about a certain line of business, and they'll do it consistently. And oftentimes regulators have been concerned about the reputation, specifically the FDIC and the OCC, of the banking system. So take back in my day when debit cards were first introduced, brand new product, absolute brand new product. We had a policy that said we would not allow debit cards to be used at a casino.
Okay.
Why? There's no law that says that, right? That was a message that came from the FDIC to the banks that said, hey, you can do this product, but here are some businesses you can't do business with. So this implied pressure existed for decades. What the Trump administration has done is repealed the official implied policy that the regulators have on the banks. And that's why you see crypto and the M&A market starting to take off. Mm-hmm. And you're going to start to see it in marijuana banking and other banking sectors, because the regulators were holding that back from a reputational basis because they didn't see it as good business for the American banking system.
Okay.
And they weren't doing it with laws and regulations. They were doing it with their power.
Okay.
And so what you saw the Trump administration do is come in and remove all those memos that made all those suggestions and stripped us down to just the regulations, which opens up banks to be able to participate in cryptocurrency. And it's going to open up the marijuana banking market. And we're going to start to see mergers and acquisitions, which is a little bit different subject. We're going to start to see that environment improve, and we're going to see fintechs getting bank charters and so on and so forth.
Yeah, it's going to be interesting. Yeah, it's going to be very interesting. I've been paying attention to some of the, like, I think Ripple just is looking to get some kind of a bank charter right now, and a couple other ones. So yeah, it is definitely going to be some very interesting developments in that space, I think, in the next 6 to 12 months. I think I agree with you completely. And not to side note this for a second, but I've actually got this book here that I just picked up. It's called Private Finance, Public Power, and it's a history of bank supervision in America. And it's written by Peter Conti Brown, who is a pretty well-known professor over at the University of Pennsylvania at the Wharton School over there. But yeah, it's an interesting book so far. On, and he starts back at the very beginning, like 1790, 1791, and kind of, moves through the 1800s in terms of how, regulation was and how it developed. So very, like, again, a lot of stuff I had never really heard before. So I haven't finished it yet, but so far so good. I think some pretty interesting things in there.
Yeah, fabulous perspective. I can't wait to pick that up. That sounds great.
Yeah, no, like I said, I'll do a review on it one of these days as soon as I finish it. But yeah, very, very interesting stuff. And giving very different perspective on just kind of regulation and how it has changed and morphed over the years. And obviously our system today is much more sophisticated than it was 200 years ago, but just very interesting, just to, kind of gives you a different frame of mind on some of these things, which I think is good. I think it's always good to get, look at things from different perspectives.
Right. Absolutely, Joe. I think that's outstanding.
So great. So I'll tell you what, I always like to wrap up, Jim. I've got a question that I ask of all my guests, and it's kind of a pop culture related question. So do you have any favorite business books, or do you have a favorite like business related movie, like maybe something like Wall Street or The Big Short or something like that?
If you would have asked me that last year, I would have a different answer. But this year, with the legs that artificial intelligence is getting in our world, the regulatory and compliance world, the technology changes, and the what they can improve on is easy. It's simple. It's actually simpler than anything. What's difficult is the mindset of the individuals. And so I'm going to say, Who Moved My Cheese?
Okay.
I'm going to bring that old book back. Pardon me. I'm going to bring that old book back because it applies. And really understanding that change is coming. And it's not a bad thing. It's just a change. And so that would be that. My favorite movie of all time is not financial, but I do like The Big Short. I like it when they can take what is potentially a harmful or an economic crisis and put it into such a way that they can tell a story that it's interesting for people to hear, right?
Yep.
So it wasn't easy closing banks at the FDIC, but why did we do it? Well, watch The Big Short.
Yeah, I really think the beauty of that movie is that they took a very complicated subject and they were able to tell it in a way that anybody could understand it. That, you didn't have to be a Wall Street wizard. You didn't have to know a lot about business. You could watch that movie and you could understand, you could get the gist of, okay, here's what was happening at that time period. And this is what the problem was. And these are some of the things that were going on. And I think that's really one of the cool things about that movie is that they were able to tell a story in a great way that, pretty much anybody could relate to, which was really good. Right. So I agree with you there.
And watch bond prices and interest rates. So those will adversely affect bank portfolios in the future.
Yeah. Oh, absolutely. Well, I mean, we see that right now. I mean, you're still, again, banks are still dealing with the whole unrealized losses in the bond portfolio issue. That's still a big issue hanging over a lot of banks' heads right now. And I don't know how quickly, I mean, I don't know if anybody really does, like how quickly that situation will correct itself. I mean, that could linger for, another couple years. I mean, we'll just have to see what happens. But you're absolutely right there, Jim. Yeah, absolutely right. Okay, well, with that, I'll wrap up, Jim, by basically saying if anybody wants to follow you or if they want to contact you, what would be the best way for them to do that?
So on my LinkedIn profile, I put real email addresses and phone numbers. So I'm very accessible. People can call me with questions or concerns or anything I will help with. The best thing to do to learn about our company is McCarthyHatch.com. That's McCarthy-Hatch.com. And that tells the story. I'm published. We're published quite frequently, and we try to keep an inventory of those articles on the website. And it explains our products and services as well. So I can't thank you enough, Joe.
Perfect. Yeah, and I'd highly encourage people to follow you on LinkedIn. Jim posts a lot of great things on. A lot of great articles, a lot of great commentary. So yeah, definitely follow Jim on LinkedIn. And for anybody who is watching, there will be a link to Jim's website down in the description if anybody wants to go down and check that out. So we will absolutely have that down there. So, and with that, Jim, I will just say thank you so much for joining us today. Thank you for taking time out of your schedule. And I really do hope that you will come back and join us again soon.
Joe, it's an honor to be with you. Great show.
Thank you. Thank you so much, sir. All right, everyone. Well, that was Jim McCarthy with McCarthyHatch, and like I said, it was such a great honor to have him spending spending a little bit of time with us today, and I'm sure he will be back again real soon in the future. But with that being said, I will wrap up by saying if you like this episode, please make sure to like, share, and subscribe, as that always helps the podcast. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there, and I will see you again real soon. Thanks a lot.